Hey YouTube, first thing to say, happy Friday. Welcome to episode 35 of my investment journey series, the series we do right here on my YouTube channel, where I talk to you guys about my Trading 212 portfolio, my investments, talk about how things are looking, what I'm planning to do next, how the portfolio is holding up, all that sort of stuff. I still class myself as a beginner investor. I only started investing this year back in April as we entered lockdown here in the UK, as the stock market had crashed due to the pandemic and all the lockdowns going on around the world. And like I say, I'm documenting this entire journey here on my YouTube for all you guys and for myself to keep me accountable, to keep myself going. So if any of that sounds interesting, or if you just want me to shut up and get on with this, just do yourself a favour, hit the subscribe button below, drop a like on this video because it really does help out. You probably hear that from every YouTuber right now, and I know it's boring, but it's true. It really helps out, gets these videos into the faces of more people on YouTube interested in this sort of content. So yeah, thank you guys, really would appreciate it. Go ahead and do it. With that being said, it's Friday today, work's now finished for the weekend, so that is always a boost. Let's crack on with this and we will jump into the app on my iPhone, Trading 212, go through my investments, and we'll just get on with the video as always. So here we are guys, on my Trading 212 portfolio on my iPhone. That's the app open now, and straight away portfolio value is now £12,123, just changed there, and 81 pence. So I have now invested £10,793.63 of my money into my Trading 212 and into these investments, and the return is now showing £1,330.72, so 12.31% up on the portfolio. As usual, looking at the weekly view, and we can see this time last week we were at £1,335.30 return, so 12.44% up on the portfolio, and now we are at £1,330.77. So it's dropped only slightly, just by £5, which to be honest is nothing to worry about, especially when I've been through April, May, June times of investing when things were extremely volatile and we were seeing crazy dips and then crazy jumps. This is actually really steady, and yeah, it's a bit weird seeing this, to be honest. Looking at the monthly view, you can see the return was around £740 mark, 7.47%, and it's went from that up to the 12.33%. So the monthly view shows this is a definite improvement, which is really positive. And yeah, this has all really shifted up a gear since the vaccines have been announced for the whole pandemic. Things have jumped up, investments have went into a bit of a rally, and things are looking a lot healthier in general. Let's have a look at the history of my account and we'll get to see what's been going on recently. So we will start with transactions, and you can see that not much has been going on since the last real deposit I did was back 23rd November, £250 I deposited, and then you can see these other amounts here, so £7.90, and that was a free share that I received from somebody. It tells you there in the description actually, free shares promotion. So I received that. I also got this other one on the 30th November. I think this was General Electric I got on our free share promotion. And then I got another one here on the 8th of December, so just a few days ago. Again, another free share. I get paid again next week, so I will be depositing more money into my Trading 212 account then. It's a habit I've now managed to get into my routine. Every time I get paid on payday, I deposit a certain amount into my Trading 212 account. I just automate the whole thing and I don't really think about it, and I think long term that is probably the best approach, and it is definitely one I would recommend. But of course everybody's situation is different, so please don't just listen to me. Always think for yourself, do your own research and take things from there. Looking at dividends recently, there's not been a whole lot of activity going on here. So you can see the 30th November, which I think I covered this in my last video. That was the iShares Global Clean Energy, and that was a dividend of 70 pence I received. And then more recently, 2nd December here, you can see my dividend from Starbucks of 81 pence. Having a look at the orders tab, and we can see here 25th of November there was one share of General Electric, and then 30th of November the same again, that was free shares. 2nd of December Starbucks and McDonald's, so I increased my position very slightly into my Busy Pie. And then 7th of December I sold my Hive Group 25 shares. They were finally back into quite a decent bit of profit. It was a company I was not really interested in any longer, so I just got rid of them. Felt good to kind of tidy up the portfolio a little bit and get a bit of profit. Then I also sold 2 General Electric, my free shares. Wasn't really interested in holding them long term. I sold 1 Smile Direct Club, another free share that I received, because again, I'm not really interested in them long term. And looking at the 8th of December, that was recently another free share that I received, that General Electric one I mentioned. So I think I've sold that again recently. And then coming up to today, so a bit of tidying up today. I sold that General Electric share that I received. I sold my 1 EasyJet share, which it was actually a lot of profit and it was looking good, but again, I've not really got interest in holding long term. I sold my 2 American Airlines. They were up, I think 70-80%, and yeah, got a good bit of profit there. Again, free shares, so I wasn't really bothered about losing them. I bought 1 share in the S&P 500 again to increase my position slightly. I bought more Starbucks and McDonald's. I bought 5 more of the iShares Global Clean Energy ETF. Clean energy, definitely the future, it's not going anywhere, so I thought I'd increase it there. And then I decided to buy 1 more unit in the FTSE 100, because I think I had about £7 remaining in the account, and I thought let's just use it up, get another unit in the FTSE 100. So coming back to my actual portfolio here, and we'll look at the investments individually, starting with the bottom, the Vanguard FTSE Emerging Markets ETF. Weekly view up 1.95% from last week, so my 27 shares are now showing that return of £214.67, 18.61% up overall. Really healthy looking investment, definitely a good long-term one for me. And like I've said in previous videos, I'm a big fan of this ETF. Definitely recommend you guys check it out. Ticker symbol is VFEM. So do your own research and let me know what you think in the comments. Next up is the VanEck Vectors ETF that I've mentioned before. ESPO is a ticker symbol. From weekly view, it's 1.10% up from last week. My 5 shares are now that value of £155.52. So we're now showing a return of £10.77, so 7.44% up in the portfolio. Coffee fans, where are you at? Starbucks is next up here. We're looking at a 0.86% increase from last week. My 3.34 shares is now showing a value of £260.80, so £26.35 return, 11.21% up in the portfolio. Shell. My Royal Dutch Shell investment, weekly view is down by 0.27% from last week. That is really, it's changed 0.25%. 0.21%, wow, 0.18%, 0.15%, wow, maybe the more I keep talking, the more it's going to change. Yeah, from last week, 0.13%, 0.10%. Okay, I'm going to shut up now. From last week, you can see 0.10% down. That is really nothing to worry about compared to, like I said earlier this year, things were just insane in a very negative way for them. But recently, it's been on a really decent climb, as you can see here. And I am one of the believers in Shell. I really think they're going to manage to turn around their whole business. A lot of controversy around this right just now. A lot of people not thinking this is going to happen. If you don't know, they're focusing a lot more on their renewable sectors and their whole green energy initiatives. So they're kind of trying to become a key player in that sector. I think it's extremely possible they will. They've got the assets, they've got the cash, and I just can't see them going anywhere. For that reason, I'm going to continue to hold. I've not actually increased my position in them recently. I think I'm kind of overexposed with them. I think about 15 or 16% of my portfolio is actually made up with Shell. So I think I'm happy where it is right now. And 138 shares, I've got £1,861 and that return of £247.59. So yeah, 15.34% up overall. My 5 free shares of National Grid is 2.57% up from last week. I don't really go into too much detail on this stock because it's just free shares. It's not really one I'm that interested in, but it's a decent enough stock, so I'm happy to hold for the long term. McDonald's is next up. Weekly view 1.66% down from last week. So this is one of the holdings in my Busy Pie, and my investment is now showing that roughly 1.6 shares, £250.56 it is worth. That's the value of this investment, and that return is now minus £18.83, 6.99% down with this one at the moment. Legal and General Group, ticker symbol LGEN, for those who do not know. Weekly view is 6.87% down from last week. I now have 270 shares in Legal and General, showing that value of £658.53 with this investment. And my return on this investment so far is £120.78, so 22.46% up. And I'm happy again with this one long term. Definitely a key player in my portfolio, and definitely not going to be going anywhere anytime soon. The iShares S&P 500 Healthcare Sector ETF, ticker symbol IUHC, 0.42% down from last week. 38 shares showing £239.64, so a return of £4.38 just now, 1.86% up. I might sell out this one sometime soon, to be honest with you. I don't really have much interest in holding it for that much longer. I kind of expected it to jump up a lot more than it has done recently with the whole news around the vaccines and whatnot. And yeah, I think I might just get rid of it to tidy up the portfolio a little bit and put the money that I receive from this into the S&P 500. iShares Physical Gold ETF, I'm not going to mention too much on here, but 2.59% up from last week, so that's quite promising. So my 16 shares, and currently negative £54.04, so down 11.02% in the portfolio. iShares Nasdaq 100 ETF, weekly view, 0.41% up from last week. Return of £124.24, so 13.41% up with this investment. iShares Global Clean Energy is next up here, ticker symbol INRG. Big fan of this one. Clean energy is definitely the future. I think everybody can agree on that now, with all the news around electric vehicles and the way the government's really trying to make a push on clean energy, not just here in the UK, but just around the whole world. So I really just can't see this ETF failing. And yeah, for me, it's a no-brainer, so that is why I'm investing in this. It's why it's going to be a long-term hold for me, and I'm going to continue to invest into this one every month. My investment is 27.5 shares at the moment, and that's shown a return of £23.74. So at the moment, it is 9.2% up, and yeah, I'm pretty happy with that. We can see it's been a good climber over the last year, for sure. Last 3 months, still looking positive, so I think this will continue. Let me know in the comments what you guys think. Do you think I'm right? Do you think I'm wrong? Let me know. Next up, the biggest holding in my portfolio, the iShares Core S&P 500. I know, it's boring. It sounds like the sort of thing that everybody recommends and says that's what you should do, whatnot. I don't care. I think it's a solid holding, and it will continue to be that way for me. It will continue to be a long-term hold. Ticker symbol is IUSA if you're interested in checking it out. So my investment is now worth £2,964.19, showing a return of £320.64 at the moment. So that is a 12.13% increase on this investment. That's what my return is at. Extremely happy with that. And if we look at the 3 monthly view here, just to give you guys an idea, last 3 months is rose by 5.04%. So yeah, really chuffed with this one. Next up is my second biggest holding, the iShares Core FTSE 100 ETF, ticker symbol ISF. Weekly view, 0.28% down from last week. 3 month view, 7.82% up from the last 3 months. So I now have 379.5 shares with this ETF, and that has now shown a return of £283.56, so 13.10% up with this investment. And yeah, this will be another long-term hold for me. It'll be really interesting to see what happens with the whole Brexit situation that we are going through right just now. It's recovered nicely recently with the vaccine news, but who knows what's going to happen with Brexit. I mean, even our Prime Minister doesn't really know what's going on there. So yeah, it's kind of up for debate. But again, I think long-term it's going to be okay, and I can't help but feel that it's kind of been priced in already, the whole no deal or a deal situation into this ETF, into this investment. So yeah, I'm not really too worried. And again, another long-term hold for me. And last but not least here, Cineworld Group, 200 shares, weekly view, 2.24% up from last week, 3 month view, 21.9% up over the last 3 months. Again, vaccine news and everything went shooting up here. 200 shares, currently worth £127.14, showing that return there of £51.44. So this investment is actually 67.95% up for me. So that is really promising. I actually bought in when it was pretty much at its cheapest price. So that's why I'm showing such a healthy return right just now. I don't know if I'm going to hold this one long term. I can't really see cinemas being that big a player in the future with all the streaming services we've got right just now, and the fact that people have kind of adjusted to being at home a lot more, being in their own comfortable surroundings, watching things. So yeah, I'm not too sure. I'm going to do a lot more research into this over the next few weeks and figure out what I'm going to do. But at the moment, I'm going to continue to hold it, and that's how that's looking for now. Having a quick look at my busy pie here, and the holdings are still the same. So I've got Starbucks, McDonald's. Starbucks is set to 55% and McDonald's is set to 45%. Looking at the overview, it is showing a £7.11 return, so 1.41% up with this. And I think it's a decent one still for me. I was debating about adding Greggs into this busy pie, but I've not actually done that yet. It's one on my watch list still, so I'm still going to be doing a bit more research there, and then I'll figure out what to do over the next few weeks. So looking at the portfolio allocation overall, £12,140 and 10 pence, 14 investments, so it's a little bit less than last time because I've tidied it up slightly. We've got the S&P 500 still at the top, 24.39%, followed by the FTSE 100 at 20.15%. Like I said earlier, Royal Dutch Shell, 15.31%, FTSE Emerging Markets 11.28%, and everything else is under that 10% mark. As always, if you're interested in getting involved with investing, I recommend using Trading 212. It's the app and the platform that I have been using since the beginning of April with no complaints. And if you want to sign up and you use my link that you can see here on the screen, I would really appreciate it. It's also in the comment section of this video, and it'll also be in the description of this video. Click on that link and download the app to your phone, or if you're on your browser on your computer, just create an account and sign up. Deposit a minimum of £1 into your account, and you will then receive a free share worth up to the value of £100. So if you do end up doing this, let me know in the comment section of this video what free share you receive. I'd be extremely interested to hear it, and all the best of luck to you on your investment journey. That's all for this week, guys. Thanks again for watching. I really do appreciate it. If you've not subscribed, please consider doing so. Please drop a like on this video, and I'll keep doing this sort of content. And let me know in the comments section what you think the stock market's going to be like over the next few weeks. Let me know how your portfolios are looking, and all the best of luck. And we will see you again in the next video.